As you know, Matt Ronley and a number of other researchers have argued the relevant increase in wealth inequality really is centered in real estate and housing wealth. Do you agree? And if so, isn't it enough just to be a Georgist? Can't we just do the redistribution there?
If you look at the top of the wealth distribution, I don't see a lot of real estate. I don't think Matt Ronley or anyone, is saying that the huge rise in billionaire wealth in the US has anything to do with real estate. As far as I know, nobody has ever tried to put this theory on the table. So, I'm not saying real estate is not important. I think for middle class assets and, lower middle class and upper middle class assets, for the middle of the distribution, real estate is of course very important, and the movement in real estate prices explain a lot of what's going on, both in terms of aggregate value, distribution. So I'm not saying it's not important. It is very important. And, if you go back to a paper with Gabriel Zuckman, which was published now almost 10 years ago in the Quarterly Journal of Economics in 2014, called Capitalist Back Wealth Income Ratio in the long run, 1700-2010, you will see, we have complete decomposition about the role of real estate in aggregate wealth accumulation, and it's absolutely central for many countries over many period of time. We cannot have any disagreement on that because, this is our data, this is what we did almost 10 years ago. But, that's not going to explain, for instance, what happens at the top of the distribution, because real estate is absolutely negligible when you look at top billionaire wealth. Here you need other stories.
But for the distribution overall, it seems there's a lot of papers, quite recent, like Audron Bonnet, Jorda, the Ronley work, Knoll, Pfeffer, and Waitkus. They seem to think it's primarily about real estate, if not 100%, predominantly real estate. So you don't agree with their estimates, or you just think you're addressing a separate problem of billionaire inequality at the top?
No, I think, again, it depends whether you look at aggregate wealth or you look at the distribution of wealth. If you look at aggregate wealth, then, real estate is a really big part of the increase in aggregate wealth to income ratio, especially in Europe. Less so in the US. In the US, the aggregate wealth to income ratio increased much less than in Europe. But for the aggregate wealth to income ratio, especially in Europe or Japan, real estate is the central explanation. There's no doubt about this. Now, if you look at the distribution, it's a very different story because, in fact, the increase of the relative price of, real estate asset relative to, say, stock market prices or financial asset is actually relatively good overall for the middle class as compared to the very top. Because the middle class owns mostly real estate, and whereas the top owns mostly, financial and business assets. So if the only force at play was the big increase in real estate price, in fact, wealth inequality should have declined, or at least top wealth share should have declined relative to the middle, which, obviously, this is not what we see. I mean, there is some disagreement about the magnitude of the increase in top wealth shares, but nobody is saying that top wealth shares have been declining in recent decades in any country. So, by definition, the real estate argument is not going to explain what we see for the wealth distribution. So then, it depends what segment of the distribution you are interested in. But if you're interested at the top share, if you're interested at the very top, billionaire wealth, which, after all is interesting in its own sake and is a non-negligible fraction of total wealth, I think, again, nobody is saying that real estate is explaining this. And if you see a paper saying that, please send it to me.